Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
And if you watch that 10-year yield continue to percolate above 4.5 on its way to 4.76, you get above that 10-year 4.76 and stick that landing, it'll be too late for hedges. I'm telling you right now, it'll be too late for hedges. We'll be off in the 4.8 and it will be running higher, and it will be a serious run higher, and inflation will start to take over as the narrative, not liquidity. Do you remember this chart that I gave? Also, let me just show this because this was a fabulous tell that I have talked about. Also shown this. I show it to clients all the time, but I'm talking about occasionally I'll poke it up right here on the screen. Liquidity matters to market returns right now, full stop. It has since 2009 when they came in and did all that policy intervention, and they've been coming in ever since. Stealth QE, actual QE, doesn't matter. Well, I have this handy dandy little E-mini futures right here, and it also corresponds with Fed balance sheet. And I have it on a 2-hour chart just because I really watch this every day. Long story short, when we did our talk and I said, VIX is coming down into May options expiration, and it just needs to break this level, and then we can head down into 25 and then 20. Same time that VIX did start to break that key level, which was on April 22nd, we had liquidity come back up and cross my line in the sand, which is it went from negative to positive. Ta-da! And guess what else happened? The M-minis started to grind higher. What was the price target I gave? Exactly tagged yesterday, 5928.25. So this is literally one of the targets that I gave a few weeks ago, and it's because of liquidity. And the reason why I harp on this is because once the 10-year starts to get up to the 4.8, liquidity won't help us anymore. This will not be a guide. I have to go and use something else because VIX will start to get really busy. Equities will start to get a big headwind. The dollar will continue to fall. People will be very confused about that as yields move higher. Gold will pick back up again. And that liquidity tell that I just showed you won't work. So I'm serious about this. This is not the same market we had.
If you had to look at one thing, Samantha, is that it? Is it the 10-year yield? What is the one number that matters? Full stop.
Full stop.
Okay.
I use it as a rate differential as well with my dollar yen. I use it against my intermarket analysis. There's no question. I use it against liquidity tells, which I have a few. That's not the only one that I use. But as it relates to dollar falling, yields rising, that is still my baseline bet for this year. And right now we're in this kind of Goldilocks zone of we're coming off the euphoria of the Trump trade deal. If it actually comes to fruition, and him in front of MBS and shaking hands with all kinds of dubious characters. It's the stake of the devil got together and had a party, and they invited all of us in, and some of us went, and I'm back here going, don't do it. So I don't trust it, long story short, but it is money, and the market is responding to liquidity and the promise of liquidity. But I'm just telling you, if this 10-year gets and stays above 4.8, it will no longer be about liquidity. It'll be about inflation. And then the market will lose this traction of, they've got all kinds of money coming in. No, the money actually makes the inflation worse. Anyway, we'll do this another time, but the point is, that's my story.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.